Hello and welcome back to the Complete Scalp Trading course by Wealthy Education. So, this is a video that I cannot show you on charts. This is about trading psychology, and in and of itself is a complete study. However, I would impart to you that trading psychology is a huge influence on not only the markets but your results. So take a look at this PayPal chart, and it's a daily time frame, but it really wouldn't matter. What does this tell you? This tells you that there is a certain amount of fear holding this. Look how we have completely capitulated and fallen apart, just as the move up to this was greed. Well, that shows up in your trading as well. You need to have a plan ahead of time because unfortunately, when you get in the heat of the moment, it's too easy to have greed or fear take over. So let's take a look. Let's just say the 1 minute chart. You short this market, you decide to sell it, you're trying to profit on lower moves, and then it starts to work against you. Well, you have a fear of taking a trade against you, a loss, if you will, and you get out. Or worse yet, you don't get out. And in that scenario, the losses compile. On the other hand, if you get a bit too greedy, just like you would have in this situation, perhaps, let's just say that you have a signal here and you recognize this is an area that will be interesting for buyers and you're supposed to take profit there. Well, if that's your target, that's your target. You leave it alone. You do not try to swing for the fences, as it were. Your risk might be this much and your target might be that much. And that's perfectly doable. If you know that going in, then that helps you overcome your fear and greed. You know when it's time to get out, you know when it's time to take profit. There is such thing as overtrading, and this is especially true in scalping. With scalping a market, in theory, you could be in and out all the time. The reality, though, is you need to find areas that matter. So I would mark this up as, there's an area that matters. There's an area that matters somewhere right around there. All of this stuff in the middle doesn't. And unfortunately, people want to get in and out of the market as much as possible. That greed kicks in and you feel like you need to trade. And overtrading can lead to consecutive losses. I mean, you will have consecutive losses sooner or later anyway. That's just part of the game. But if you have consecutive losses, you shouldn't feel rushed to get it all back. You should recognize that your system, your trading setup that you look for, is or is not there, and that's it. Your risk appetite, your risk management plan is what it is. So if you're risking 0.1% or a full percent, it doesn't really matter. What you're risking is what you're risking. You don't risk anymore. You don't say, hey, I've shorted this market. I shorted it all the way down here because it broke out, but now it's going against me. But eventually it's going to come back my way. You don't behave like that, especially scalping. Scalping is very difficult in the sense that you have to be able to take losses quickly. Kill the monster while it's small. So you have to have rules ahead of time. Let's say 3 consecutive losses. You just quit trading for the day. You're just not in sync with the market. And that will happen, especially if you're scalping because you're talking very small movement. There are a lot of ways to improve your trading psychology. I would urge you to study, buy books, that type of thing, but you also need to paper trade. You need to trade a demo account so that you learn how a market behaves and you learn that, sometimes things just happen and there's no way around it and that's fine because in the long run, you know that you'll make money. Psychology is without a doubt one of the more difficult parts of trading because there is so much emotion with winning and losing when it comes to finance. Think about all the trouble finance causes for people in the real world. So trading, of course, is going to be no different. So with that, I would also suggest that you should journal at the end of every day, see how you traded, notice things. Maybe there is a certain pattern in your psychology that tends to work against you or for you. You need to be aware of all of this. It's a real study in introspection, but it's very important. And in fact, some would say it's the most important thing. It's easy to look at a chart here and go, well, I would have just held all the way through here. Well, the question is, would you have really? Do you have the stomach to hang on to a move as it comes back against you? And then here, are you like, oh my God, this is the end of the run. I better keep all of these gains? Those are the questions that you need to address, and they can only be taken out with experience. And that's why demo trading or even trade simulators, there are plenty of trade simulators out there that you can use and give you a bit of a heads up on this. In the next video, we'll talk about risk management, which in a sense is part of psychology in the sense that it keeps your risk relatively low, and therefore your psychology should kind of come along with it.